If you've been following the housing market, you know that mortgage rates today are about double what they were this time last year. So should you buy a home with today's interest rates? What's up? It's Schein with Valencia from the Mark and Casey Realty Group. Let me answer that question with a resounding yes. I'm going to give you a lot of logical reasons why, but probably the most important is that the higher rates have significantly reduced demand, also known as your competition. So buyers today are getting deals we weren't seeing 3 months, 6 months, a year, 2 years ago, because sellers are realizing they have to be more realistic with their pricing because rates have made mortgage payments more expensive for buyers. On top of that, there's 3 times more inventory today than there was at the beginning of the year. That means more options for you as a buyer. Sellers are incentivizing buyers to come to their door by even offering rate buydowns and closing cost credits in ways we were not seeing earlier in the year. For example, there's a couple buyers I was able to negotiate great deals for them. One of them, 65 grand below asking price, and the other, 45 grand below asking price with $15,000 in seller credits. This was not even a possibility earlier this year, but now we're seeing it. So think about this way too. If you were a buyer in the last 1 to 2 years, or maybe you know someone who was, it was so frustrating and exhausting. Buyers were getting fatigued because they were losing out on 7, 8, 9 homes because after 1 week of a home coming on the market, they were competing with 10, 15, 20 other buyers, and they had to go 50 to 100 grand over asking price. Think about this. If you have a 5 to 6% interest rate today, but you're able to negotiate a great deal on the price, is that worse than having a 3% rate but going 50 to 100 grand over asking price? No, I don't think so, and here's why. Keep this rule of thumb in mind. Purchase price is forever, interest rate is not. What do I mean by that? When you buy a home, whatever price you close at will never change, but your interest rate can. And when rates drop, just refinance, and now you get the best of both worlds. Another option that buyers are considering, adjustable rate mortgages, where your rate is fixed at a lower rate for, let's say, 7 to 10 years. I have buyers right now that have been getting pre-approved at a 4% interest rate. They're saving hundreds of dollars a month on their mortgage, and by the time the rate adjusts, let's say they had it fixed for 10 years, odds are they're going to sell the home. Statistics show the average homeowner only keeps their home for 8 to 10 years. The ones that hold their mortgage for 30 years refinance on average 4 times because rates are dropping. Rates will not keep going up forever. So get the best of both worlds. A lot of the housing market experts were forecasting earlier this year that we were not even going to be seeing double-digit home price appreciation. Well, just recently they all changed that. After seeing how the first half of the year went and seeing where we're headed, they're practically all saying, yep, we're going to see double-digit home price appreciation again this year. So why wait for prices to go up? Lock in the lower price now, especially if I can negotiate a great deal for you, and just refinance when the rates drop. Or consider that adjustable rate mortgage and save all that money and either sell the home or refinance before it adjusts. Another thing, if you're a renter, why is this a fantastic time? Well, what's your interest rate right now? 100%. All your money goes in someone else's pocket, making them wealthier. With that said, 5 to 6% rate is a steal compared to 100% interest rate because at least you're building your own equity, making yourself wealthier, and giving yourself more options. On top of that, you don't get a tax break on the rent you're paying. When you own a home, you get a tax deduction on the interest that you're paying. So with all that said, no, it's still a seller's market. Not every home are you going to be able to get a great deal, but it is much less competitive. You have higher odds of getting a better deal. You could refinance when rates drop, and you have the security, peace of mind, and can sleep well at night knowing your rent's not going to increase year after year after year after year. Just like this last 12 months, rents went up about 18%. So if you have questions, feel free to reach out to me. Like and subscribe to the channel if you haven't already, and click the bell icon so you can get notifications when I release new videos. This is Schein with Valencia. I'm happy to serve you, and I'll see you at the next video.